Okay, so the last time I popped a bottle was actually when NIO announced the funding secured, and of course today is a big day for NIO as well with the great earning numbers. So I'm gonna pop another bottle, and although in Germany now it's lunchtime, I'm gonna pop this one. Whoa. Alright, cheers to the NIO longs and to a great earnings day. Alright, and now before I'm getting too drunk at lunchtime, I'm going to dive into numbers and see how they were actually performing in contrast to what I was previewing earlier, like on Saturday in my last video. So let's have a look at the numbers. So not only the sparkling wine is popping here, also the stock makes a little pop on the earnings, is trading up 8% pre-market today. So let's quickly look why the markets are excited about the earnings and what it means for NIO in general. So in general, the numbers came in better, even better than what I was actually previewing on Saturday. And you can see I'm excited about it because it's actually really good, positive on what NIO is reporting here in the earnings. So let's quickly dive through a couple of highlights here. So the highlights are here already in the CEO and CFO comments, and I'll start with beyond the strong order growth. So outlining that there is actually more and more orders coming in. They are proud to announce that they reached a milestone this quarter with respect to the key financial metrics of the company, highlighted with historical high vehicle gross margin of 9.7%, lowest ever operating losses, and more importantly, a positive cash flow from operations for the first time in our history. We will continue to focus on improving operational efficiency across the company. Meanwhile, we stay committed to investing in the technologies and services to provide the users with the best products and experiences in the future, blah, blah, blah. So all in all, really positive, beating on the margins here. And yeah, the sales, we already knew them. They have been in line, although with higher average sales prices. That's been a surprise on my side because I have been actually calculating with some more conservative numbers here. So obviously NIO is beating on those expectations. So I was estimating 480 million revenue from vehicles, and instead they made 493 million. So that's 2.7% more than what I was expecting. But the highlight is actually here for the other sales. I was guesstimating that the other sales are not growing so fast because, well, the user base is still relatively small and just starting to grow, and the other services are not really kicking in yet. However, they made 33 million revenue, so that's 65% higher than what I was estimating, and that's really, really positive because it's showing that NIO can actually monetize their user base, their loyal and passionate user base, and I think this point will actually just be growing in the future. At some point in time, this will get even as important as the vehicle sales in my point of view, so it's great to see that growth coming from this section here. Then also always good, the cost for the vehicle sales has been lower than what I was guesstimating. And of course here the sales to vehicle margin is actually 76% higher than what I was anticipating. So here landing at 9.7% of vehicle margin, which is incredible. This is almost double digits already, and that's really a great result for NIO here. Then for the cost of the other sales, of course they have been a bit higher than what I was estimating, but I was also estimating actually lower sales in this regard. So it's still good, and overall the cost of sales have been 1% lower than what I was actually guessing, so really good at this point as well. And then the next highlight, the gross margin is at a stunning 8.4%, so that is 208% higher than I was actually guessing. I would have taken any positive on the gross margin here, but showing such a big gross margin is actually really, really stunning news. So that should actually excite Wall Street as well, and this should really wake everybody up on the opportunities in NIO's business model with the outsourcing model. Even it shows that it is working here, and it's a big beat, it's a big surprise in this regard. So then I was also calculating with a gross profit here of 26 million. In fact, I posted 44 million in gross profit, which is amazing. It's 67% up on my personal expectations. So it's really good numbers here. And also on the operational expenses and cost side, I've been actually quite aggressive on this one. So I actually said that, well, the research and development, they may ramp it up to 100 million. In fact, they kept it straight at 77 million. So that is 22% better than what I anticipated. And then for the SG&A, I assumed they would have minus 125 million. In fact, they posted minus 132 million, which is of course more expenses here in this regard than I was expecting. However, it's still incredibly low in comparison to what NIO had before. That really shows how lean NIO has gotten during the time when they actually tried to avoid bankruptcy. This is really how NIO is now a lean business model, and now they're reaping the fruits of becoming more frugal in this regard. So I anticipated a loss of minus 198 million, and actually they even beat that with only 164 of an operational loss. So that's even 17% lower than I was expecting. So in general, also, yeah, with the net loss being also 18% lower, it really shows how NIO has been working on the operational excellence here, and they have been cutting costs where they could, and now they are making those profits on the gross profit side, and these are really positive signs, and it really is starting to validate the business model of NIO. So NIO is now, in my point of view, really growing fast, and this earnings call is, in terms of the timing then in the Q2 after coming out of a pandemic, this is really a ridiculous good result here, because now Q3 and Q4, they're gonna show just more strength, because in the automotive world, Q3 and Q4 is when you actually are ramping the sales. So this is really earlier than expected, and I can only say that NIO is surprising me here and is moving much faster to validate its business model. It's actually going into that growth mode now, and this is where it's going to be really exciting. And well, it kind of is the comparison to Q4 2018 for Tesla, when we also saw the first outcomes of Model 3 in the production, and also the effects on the operational side. So I couldn't be more happy about those earnings today. And I also do really like how NIO is actually also guiding here. So now the guidance is on the upside, it's 11,500 vehicles. So my guidance was actually, my guidance estimate was actually higher with 12,000 vehicles, but still NIO is guiding for a similar revenue. So I was guiding for 573 million. That's actually NIO's lower guidance for Q3, and they're actually guiding up to 596 million in revenues. So this is all really positive, because that way I think they can actually once again beat those estimates and over deliver. It's really done very smart by the CFO and by Deepin. I think the management really learned here how to manage the investors' expectations here, and I wasn't disappointed now by the CFO, Steve Fung. He seems to be a totally different guy than the previous CFO. He's really the one who knows how to tweak those margins. He knows how to set the investor expectations, and he seems to really put all those triggers into place that are important for the business model into the future. And this is now just based on the numbers that they have reported. It's not even including yet separating the batteries from the actual vehicle, which could be another driver for the gross margins and so on. So we may hear about this in the earnings call. So I'm gonna do another video about the outcomes of the earnings call. In this video, I just want to walk you through quickly through the numbers and where I have been off and where I've been on point. And actually, in summary, I would say my conservative estimates here have been pretty much point on, and it was good to be actually more conservative here, because NIO really was beating on the more important points here, not so much on the sales side and on the revenues, but rather on the bottom line of the business, which is what is getting me really exciting here. So I'm really happy that it's not a disappointment from the earnings per se, because already guiding through positive margins was a big step for NIO, but now breaking through like this, I think this is really the make or break moment for NIO. And looking backward, if they are able to post this continuously and sustainably in the future, this shows so much potential for NIO, and I'm pretty sure that alone by these numbers, the stock should actually be rallying today, as we are seeing it pre-market. So I don't think we're gonna have a big sell-off today. This is not priced in yet. However, also be careful to jump onto the bandwagon now in terms of fear of missing out, because I can just say the NIO train has just left the station. This is showing signs of profitability here, and this is what Wall Street wants to see. This is how funds can get in. So it has really de-risked the NIO stock substantially here in my point of view, and now it's the case whether or not NIO can show how they can scale and grow into the future and also continuously deliver such kind of results. So yeah, that's it. Quick video. Once again, please smash the like button. I'm gonna drink a little bit of the sparkling wine now and listen to the earning call and do a second video on that later on. So stay tuned for that. Like and subscribe, and see you in the next one. Thank you guys for watching.